So this is not synthetic exposure that distorts the pricing of the physical markets. It's actually enabling more people to allocate to the physical markets.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. Today, we have a very interesting and timely discussion lined up to work through with Ben Elvidge, head of commercial applications at TriliTech. Today, we're going to be diving into the multi-metal investment foundation called metals.io. It's a revolutionary platform giving you the ability to access investments in metals from uranium to gold and more like never before. You're really going to want to tune in for this one. Now, you can own real world assets that's now powered by blockchain technology. We're going to dig in here pretty deep. Ben, it's an honor to have you on Metals and Miners. Welcome to the show.
No, and I really appreciate the time, Gary, and thank you for hopefully what's going to be an interesting interview. I do appreciate it.
Yeah, no problem. I think it will be. Ben, before we dive in to the platform and about the technology, we're at the beginning of a huge metals bull cycle. And you and your company really sit at the intersection of it and this new exciting technology, giving investors a completely new way of investing in the cycle. We have a lot to discuss. And before we do, what's the big takeaway for those tuning in that you hope that they walk away with after listening to our conversation?
Yeah, I think it's really, we built metals.io from the foundation of uranium.io, and it's really what the message we want people to have is that it is possible to directly invest now in the physical metals themselves. You don't need to understand derivatives contracts. You don't need to only invest in miners. That's what we've built is totally complementary and in fact beneficial to be able to invest directly in the assets as well as the kind of companies producing and extracting these metals. But we think it's not been something that people have been able to do before, and there's been barriers to entry, some valid, some we would argue less valid, but now it's all at your fingertips. All you need to do is connect a wallet or enter your email address and you can buy these metals directly from metals.io. That's really the key message, is that it's really about opening up that access so anyone can allocate capital to what we think is a critical part of everyone's investment strategy.
Wonderful. All right. So you successfully launched uranium.io in December of 24, bringing tokenized uranium to the market. What key learnings or milestones from that journey led to the creation of metals.io?
Yeah, so I think it wasn't the only reason, but we chose uranium deliberately as one of the hardest possible test cases, right? So if we can solve custody, compliance, physical settlement for a material that's heavily regulated, where storage needs to be licensed, kind of the counterparty landscape is very difficult and opaque and dominated by producers and utilities. If we can do that and prove that there is a market for that and people are willing to come and use blockchain technology to access that and see the benefits of it, honestly, everything else is quite frankly a step down in complexity. And so really 3 learnings drove that expansion. So first, the custody and compliance architecture and the way we think about that was asset agnostic by design. So it's different warehousing solutions, as many of your listeners and viewers will know. But predominantly you've got secure licensed storage. You then need to operate under the same legal framework, which we can do with our partners who are FCA regulated. So that's the UK regulator. And so you can apply all of those learnings and benefits to those other metals as well by doing not so much that's different. And so second, the demand signal was quite immediate and real. So investors who understood the uranium thesis and the nuclear thesis, and your audience, I'm sure, knows the fundamentals better than most, were buying within days of launch. And so we thought there was good product market fit there. But then we immediately got kind of questions about, well, what's next? When's gold? Could you do this for copper? Could you do it for nickel and for cobalt? And we absolutely took some time to think about it because we want to make sure we could make uranium the biggest success that it could be before we moved on and added capabilities to the platform. But that's sort of where we are. And then third, we kind of proved that tokenization can enable and can bring a sort of new audience to and demonstrate that demand for physical material. And actually the tailwinds are behind us now with everything that's going on from a geopolitical perspective. And so every token that gets minted, and we can only mint more token when more physical material is procured, and that's important for many of your audience, I would guess, is that this is not about creating synthetic exposure that's displacing physical demand. It's not about creating derivatives. It's actually about making it easier to allocate capital to the physical spot market for a lot of these metals. And yes, our roadmap does continue on with additional capabilities and additional products, but right now it's very much about that, creating that additive demand and creating and enabling that new buyer category to access the commodity itself.
Are you expecting to go across all commodities?
I think it's interesting because it's now a question, ironically we started with uranium and people ask, well, when are you doing other metals? We're now doing other metals and people are now asking, when are you doing other commodities? I think if there's the same sort of structural imbalances from a demand and supply perspective, if it can be stored securely and you therefore can wrap it into the trust structure that we use from a legal framework perspective rather than SPV, and it's somewhat fungible. And then finally, of course, that there's demand out there for the spot asset. I don't see why we wouldn't look at other commodities beyond metals, gems, things like that become quite interesting. I think stuff that's, got well-established markets and well-established financial products like oil, I think is the natural question on everyone's lips. I think there's a lot of means of accessing oil markets and oil products. So I think that's probably lower down our list, but absolutely the framework we've built could apply to other commodities. And I think we'll get there eventually as the wider RWA and tokenization trend reaches maturity. I think we're still early in that cycle. But right now, we think we've got enough to go after with metals.
What kind of growth curve are you seeing currently?
Yeah, so it's like any launch. I say this, right? I've been in a few different industries, all at the intersection of capital markets and technology. It's generally, and we saw this with uranium, we're now seeing it with metals, it's generally a slower burn when you launch than what you initially envisage. Very rarely do you see all of the millions of customers. I think what's the old adage? It takes a lot of years to become an overnight success. So I think from a demand signal perspective, it's starting very much in the retail space, and we saw this with uranium. And then what you see is that builds legitimacy and credibility in what you've built. And then you start to see the institutional buying signals, and we absolutely see that in uranium, and we expect to see it with the other metals. And that means a couple of different things. One, new products and sort of moving into traditional markets with using the infrastructure, as we would call it, from a blockchain perspective and the tokenization framework we've built, to then also partner and launch traditional financial products as well, potentially, but also make it relevant for those institutional clients. So demand signal wise, there are some barriers to that because, as I mentioned, uranium is the perfect example. It's generally tightly controlled from a producer and buyer perspective. Not everyone's got an interest in a very liquid, transparent spot market, right? I think from a financial investor perspective, that's great, but there are some vested interests there. But I do think we're on the cusp of seeing a lot of that institutional buying now, and I expect later this year we'll start to chalk up some bigger numbers.
Demand for critical and precious metals is really surging over the last couple of years for a whole host of reasons. I mean, you got a world that is bifurcating, supply chains under pressure, AI and robotics. You have, solar panel explosion build out. There's so many reasons, military and grid modernizations, so many reasons why critical and precious metals are surging. How do you articulate why right now is the perfect moment for this type of platform?
Yeah, look, I think you touched on a lot of great points there, Gary. And I think I see it really in two areas. One, structural in terms of the timing being positive for what we're doing. So structural deficits are widening across multiple metals simultaneously. You talked about uranium being in deficit, uncovered utility requirements as was being said at PDAC are kind of out to 2045 have never been larger. So Grant Isaac from Cameco was outlining that in March at PDAC. And then, rare earths, again, very well-known story, I guess, for most of your audience, but, supply constrained by the export controls out of China. And then obviously you add over that the geopolitical policy and uncertainty with what's going on in Iran, which seems to be getting more uncertain and certainly not by geology. And then you look at our other metal that we've got on the platform right now from gold perspective. Again, demand doesn't seem to be slowing on that side, particularly because of that uncertainty being driven by central bank accumulation at a sort of unprecedented pace. And, all of those other metals, cobalt, copper, as industrial needs continue to increase from new industries, particularly around things like electrification in the case of copper, or in the case of some of those rare earth metals, the transition to the green economy, whether that's batteries, whether that's, wind turbines, there's certain rare earth elements that they all need. That's where we see the opportunity from a kind of demand side and those structural deficits making an interesting fundamental case. But I also think, why is it the right time for what we've built is if you buy into that demand, which generally will then generate more investors wanting to allocate to it, the investor access gap is widest pretty much precisely where that macro case is the strongest, right? Gold has ETFs, futures, and physical markets, but uranium, how do you buy physical U3O8 as an allocator without a nuclear fuel procurement team and a Cameco account or a Convidine account? You can't. I mean, Sprott exists. There are some known challenges with that. There are some known benefits with that. But I'd say what we've built is complementary to that. Rare earths, again, there's no real liquid investment product at all. And so the materials that are most critical to energy security and the energy transition are the hardest to invest in. So and that's the gap that metals.io fills.
Okay, perfect. That was my question. If that was the gap, yeah. Okay. So what makes metals.io fundamentally different, not just from traditional commodity platforms, but maybe from other tokenization projects?
Yeah, I think, for this audience, I'd frame the differentiation in terms you'd apply to probably any commodity investment. So what's the backing, who are the counterparties, and what are the settlement mechanics, right? That's what any investor investing in commodities will look at. So physical backing is, in my view, non-negotiable. So every token that's listed on our platform is redeemable against allocated physical material, not pooled, not synthetic. You can't mint more tokens unless you've got more physical material. And it's not a claim against a general inventory. So if you hold XU308, there's segregated uranium in Cameco storage with a documented chain of custody that traces back to your token. And we have a regulated trustee that oversees that. The counterparty stack as well being institutional. So, we use Cameco for uranium. Our partner is onboarding with reputable names like Steinweg and Metal for storage of other metals. That's Archax, who are FCA regulated for the token issuance. So these aren't necessarily pure crypto native entities asking the world to trust them. They're established players where they've gone and been regulated, or they're already established in the commodity space. And so, it's not about sort of a bunch of young guys coming up with an idea and putting some technology behind it and saying, trust us. And I think the other differentiation that we've built is to make the platform multi-asset by design. And so most tokenization projects are single asset point solutions with some bespoke infrastructure. I think that's where we started with uranium, and hence why we've evolved into metals.io. And so there's a single wallet that you can have, which gives you all the benefits of the composability and the utility you have from being on blockchain infrastructure, delivering on some of those promises from, 12, 15 years ago when blockchain was the buzzword, and was that going to create a lot of job losses? We're now starting to deliver on that, and it also makes it very scalable and means that we can add additional capabilities, whether that's collateralization, whether that's sort of vaults, or for many of many of your audience would recognize as model portfolios. We see that as a big part of driving additional demand as well. It's not just a a set of single asset solutions. Yes, that's the foundation, but we can build on top of that.
From an investor standpoint, how does Metals.io get paid, and how do they assess their ROI in terms of the investor? How does the investor assess the ROI here?
Yeah, so in terms of how we get, or Metals.io gets paid, there is a small transaction fee on the transactions that take place. Typically, this is in the region of 5 to 10 basis points, if that, in some cases. So from a front end perspective, that's sort of the Metals.io payment. As we add additional products and we curate vaults and design model portfolios, things like that, with the requisite permissions, there'll be additional fees that we can potentially earn there, similar to what you'd see in other investment products. And then, for the tokens that the team behind uranium issued, and we'll do it with cobalt, nickel, and palladium next, there is a small administration fee, but again, that's in the region of 50 to 60 basis points, which covers the operational maintenance costs of the custody of the team developing and maintaining the platform, that kind of stuff. So there is a small ongoing fee that's charged at the token contract level, and is accrued daily. So most investors will barely notice it, but that's sort of the two levels of fees that we earn. And then as we add additional products, running those products have different fee and economic mechanisms. We'll get into that in the future when we launch those, and everything we do, like the blockchain infrastructure itself, it will be completely transparent to every investor.
So from the investor standpoint of assessing ROI, is it basically cost plus fee versus price movement?
Correct. So it's exactly that. So there's no SPV, there's no other return mechanics other than the physical asset. So if the price appreciates, essentially it's exactly as you say. So it's what's the sort of gross return from the price movement minus the fees that I've paid, and that will give you your total ROI.
Okay. So Metals.io is built on, from what appears to be a very strong network of partners, from Tezos and Archax to Cameco, as you mentioned, Mnt&x, Commodities. How critical are these partnerships in building trust and credibility throughout this process and for the investors?
Yeah, I think it's absolutely crucial. So if we take the different layers, right, you've got to start with custody and storage of the physical materials. And we would only ever work with, in uranium, you've got a choice of 3. So that narrowed the list quite substantially, and we went with Cameco. With other metals, again, we only want to work with licensed and insured and to whatever extent they need to be regulated parties from a custody perspective. And so that's a key principle. And that, again, helps build and maintain that trust layer that I was talking about earlier. Additionally, if you move up the stack from a tokenization perspective and a token issuance and management perspective, having Archax in there as an FCA regulated entity that operates that tokenization layer and also is, operating as trustee for the tokens that we issue, or that are issued from the project team, is also critical, because there's certain standards just in the conduct of business that they adhere to that we are keen to lean into as well. Again, building that trust framework. And then you mentioned it before, we've incubated and built these products within the Tezos ecosystem, on the Tezos rollup that's EVM compatible. And that's really important, because if I step away from just blockchain, and think about what do you want from a financial platform infrastructure perspective, you want something that's scalable, that's robust and resilient, that's upgradable, and let's be honest, is cheap to run. And I think the Tezos layer 1 and the Tezos blockchain, along with its roll-up, have proven that over a number of years now to be stable, to be upgradable, to be fair from a governance perspective, which reduces the obsolescence risk, and also to be very cost-effective relative to other potential blockchain partners that we could use.
And one of the things, I'm not sure if you mentioned it, I didn't hear it, is security. You'd want this to be very, very secure as a financial platform for the investor. The investor would be, want to have whatever concerns mitigated that digitally things could be broken into, could be moved, could be, wherever fraud can be. How do you mitigate? How do you make sure that from a security standpoint, all the way across all the different asset types that you're going to be deploying, that the investor can feel secure?
Yeah, so we do a few different things. So we don't try and I talked a lot about standardization of the framework, but what we don't try and do is force everything down one pipe, right? And so that's why we'll have different custody and storage providers that will have been due diligenced, not just by us, but by Archax as well, our partner. So we use those storage facilities that are well established and already exist. If you're comfortable trading physical commodities in the market without blockchain, and using those storage providers, we're using those same storage providers. So it's an evolution on the market infrastructure as opposed to net new providers where we're asking you to trust that we've stored it in somebody's shed somewhere in the UK. That's not what we're doing, right? These are evidence, and we have published proof of reserves that we've carried over from uranium, right? So every month we update uranium.io with the proof of reserves and the statement that we get from Cameco. And we do the same with the other projects on metals.io as well. Eventually, as market infrastructure and data infrastructure catches up, we'd like that to be nearer real time in terms of on-chain and verifiable on-chain. But that transparency layer kind of is really important. And so every time tokens are minted or burnt for redemption, all of that is verifiable and visible on-chain. Token supply maps directly to the physical reserves that, as I mentioned, we provide those proofs of reserves as well. And so you can verify at any time that the tokens in circulation match the material in storage, and you can understand that relationship. And so for producers that consider the tokenization of their own output, which we think could be a really interesting new business line for us, the architecture is proof that can be done to institutional standards without compromising that operational integrity. So again, I'd summarize it as all we've done is plug into the existing infrastructure providers that if institutional allocators and producers and participants in the supply chain are comfortable using, actually what we're doing is just stripping out and abstracting a lot of the manual paper-based processes and creating more transparency in that secondary market than previously existed. So it's really about that evolution of market infrastructure than a whole net new set of providers that people need to think about.
All right. So obviously that transparency is a big deal. That's a huge benefit. Is there any other benefit? Is there a financial benefit? Is there a purchasing benefit in the sense that maybe because it's on the blockchain, you could purchase in smaller increments?
For sure.
Yeah. So what are these benefits that would compel an investor to want to go from using what they've always used to now coming over to metals.io?
Yeah, so I think there's a few, you've touched on a few there, but just to recap those, right? I think one, there's no minimums. You can have fractional ownership. So, we took uranium minimums down from, if you're friendly with a broker, maybe you could buy a £50,000 increment. So what's that, $4.2 million? We took that from $4.2 million entry point to own physical uranium to 50 cents if you wanted. Now, I wouldn't take 50 cents in terms of physical delivery, but it shows what's possible in terms of that fractionalization. I think 24/7 trading absolutely is possible. We actually see quite a lot of trading happen on a Saturday evening, which is interesting and an interesting observation. I think that does a couple of different things, right? One, it means you can trade on your terms whenever you have a thesis or a change in that thesis. But two, it also means you can be much more dynamic in responding to geopolitical events, which, as many of the listeners and viewers will know, is what drives a huge amount of volatility in commodity markets is, someone blocking the Strait of Hormuz or something like that. And that may happen on a Friday, but you can't trade and express a view on that until Monday. With 24/7 markets, you can trade that much more effectively, and therefore you're able to express your views around your investments kind of as and when you see fit. And we think that brings benefits to markets as well. I think the other thing that I've talked to and alluded to a little bit, and again, we've got the example and what we did on uranium, is the composability with other capabilities on chain. And so what I mean by that is with uranium, in November of last year, we enabled people to use that and pledge that as collateral and borrow USDC up to 77% of the value to take advantage of other investment opportunities. And that happens, within the space of a couple of minutes on chain. Your collateral gets locked in a smart contract, and you've got that capital efficiency. So we think lending and borrowing becomes really interesting as something that's easily enabled for the individual investor, and the collateralization of these products. And we just think that transparency point in terms of, a lot of these markets are opaque, generally trade OTC. We think that prevents a lot of people, not just retail investors, but even some, hedge funds and more professional traders and investors from wanting to access some of these markets, because you either don't know the right people, or you do know the right people, but you don't trust the price that you're going to get at any given point in time, either to get in, or if you're holding a long position, to get out. And I think having a more transparent, liquid market has never been in any other asset class a problem. If anything, it's only fueled a boom in those asset classes. And we think we can do the same should apply to commodities markets as they become more accessible on chain.
That's interesting. Did you have users in the beginning that you attracted that helped to shape metals.io, or did you create the platform and then attract them? And as a follow-up to that, are you seeing more interest from retail investors right now, institutions, or a blend?
Yeah, I think it really bifurcates between the two. So in uranium, we had a lot of, that was really informed by a lot of people, institutional and high net worth investors, that had a uranium thesis or a nuclear thesis, but wanted a better product. And so that was one cohort on the uranium side. But then that's really morphed into a lot of people as nuclear sentiment has got even more bullish, more people looking at how they can play that trade, and sort of coming to us and saying, is this something where I can have an ISIN for it so I can put it in my risk and compliance systems and trade it, because that's a big gating item. And so the institutional dynamic has started to come from uranium, but obviously we've got a more than 12-month history. We launched uranium.io in December 2024. So I think what we thought would play out in terms of starting with retail and then that morphing into the institutional demand profile, we're seeing play out on the uranium side, which is great. I've no reason, we're only 2 weeks out from having launched metals.io. So what we're seeing in metals.io is very much a retail first dynamic as well. And I think that really breaks down into people that understand the commodities piece and are coming and trying out maybe blockchain, interacting with blockchain for the first time. And so it's become a bit of a gateway for people that are generally interested in commodities and metals trading, as well as those more crypto native allocators that want that diversification potential. Because we've not really talked about it, but the beauty of being able to invest in these metals alongside the rest of your portfolio, whether that's crypto or stocks or bonds or a combination of all of those, is in many cases they're uncorrelated and provide that great diversification potential, which gives a little bit more for the crypto folks. But then there's also the return and inflation hedging and yield bearing perspective that's a little bit more than you would get from stable coins, say, in the crypto dynamic. But for the kind of traditional investor, we think it's really that diversification dynamic that's driving people and attracting people to the platform. But that's not to say we don't anticipate and we can't support the family offices, commodity focused funds, producer side inquiries that we've been getting on uranium. I think when we launch the other assets like cobalt, like nickel, palladium, I expect that we'll see a similar pattern play out. Sorry, go ahead.
Yeah, sorry to interrupt. Are there any misconceptions that you're aware of that investors still have about owning tokenized physical assets? And if so, how would you put their minds at ease?
Yeah, so I think really, again, there's sort of three persistent misconceptions. And so it's just another crypto token would be the primary one that we hear a lot. And I think this is probably the most damaging. So, as I've mentioned a few times, this is, if you're comfortable with the infrastructure around trading the physical metal, you should be comfortable and see the benefits of, I hope, of trading and accessing it on metals.io. And so, this is not this token, and XU308 is the perfect example, is digital proof of ownership. So it's proof of beneficial ownership rather than another new asset that references the price of uranium. No, you can actually take that ownership of 1,000 ounces, 2,000 ounces of uranium represented by owning 2,000 XU308 and tell us you want physical delivery. Might be prohibitively expensive to do it that way, given you need a Cameco account, but you could do that. And so all we've really done is move the market from phoning up a broker and having 5 pages of documents and then your Cameco statement to being able to transact in a matter of minutes on chain. And so I think that it's just another crypto asset and is really damaging because there's no fundamental change to the risk return profile. In fact, compared to other options on the market, we think this gives you the closest to the purest exposure you can have to these metals. The second, quickly, is tokenization creates the view that tokenization creates paper supply that undermines the physical markets. As I mentioned before, no new tokens are minted until you get more physical assets in storage, or at least the confirmation to do that. And so this is not synthetic exposure that distorts the pricing of the physical markets. It's actually enabling more people to allocate to the physical markets. And then linked to that, we've seen with other tokenization projects that predate us that the big thing that we've really focused on is being able to take physical delivery. So you can absolutely do that with everything we've got on metals.io. Redemption mechanics are built into the token structure on every project we've got on metals.io, and every project will launch on metals.io. So it's up to you whether you want to exercise that right and what your objective is by investing in one of these metals. But the key point we wanted to start with is you absolutely need to be able to take physical delivery, because otherwise you aren't supporting the market. You're just creating another derivative, and we seem to have plenty of those.
Yeah, understatement. All right. So if you're an investor who's listening and is intrigued about getting started with metals.io, how easy is it for a new investor, especially somebody who's completely unfamiliar with blockchains, to start investing?
Yeah, we've spent a lot of time thinking about this, and a number of the team come from traditional finance backgrounds. So I think if you're comfortable using a brokerage app, you can use metals.io. So you can come to metals.io, you can enter your email address and sign up with an email address. You'll then be given a wallet in our terminology, but that's an account, and you will be asked to fund that account. You can use one of our partners to fund that from a bank transfer or from a credit card. You complete the KYC, because the minute you touch fiat currency, you need to do KYC. So our partners will ask you to do KYC. Again, same process you go through opening a brokerage account. You fund it, and then you choose which metals you want exposure to, whether that's uranium or gold or the basket of rare earth metals. The settlement happens on the blockchain, but that's invisible to you unless you choose to see it. You can see it on the explorers. And so this is really a product that feels like financial infrastructure, not a new crypto experiment. The interface, the language, the sort of way we talk about things, it's all designed to feel familiar to someone that's used a trading or exchange product or financial product before. But if you are crypto native, if some of your audience are more familiar with the crypto world and want that additional functionality, want that composability, self-custody with their own wallet, DeFi collateralization, you can absolutely do that. And we may try and make that as easy as possible, but it's not, by no means mandatory. And we've tried to remove and abstract as much of that friction as possible.
Fantastic. All right. So what haven't we discussed today that you would want folks to be considering about metals.io as we're, moving and advancing through this bull cycle that we're in?
Yeah, I think the one thing is the critical metals that power the modern economy, the materials that your audience mines, refines, and trades, should be investable by everyone. not just a few select groups of commodity traders with institutional infrastructure with high minimums. And so really that's what metals.io is about is, you know, it may sound like a cliche, but by enabling more people to allocate capital to this, critical infrastructure, as I would call it, and critical assets, then everyone benefits. And so whether that's a retail allocator making their first metals position or a fund CIO looking for a more efficient access pathway, we think that metals.io can support all of those use cases and enable more people to allocate to what we believe is a really exciting trade, not just now, but certainly into the future as well.
Yeah, I couldn't agree more with that. This has been a wonderful discussion with Ben. Before we wrap up here, I want to direct everyone who's interested in the metals and mining sector to dive into our Substack at mntx.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive. Now, I'm positive you've been enjoying the conversation Ben and I have been having. Please let them know. Hit the like and subscribe button and leave a comment below the video. All right, Ben, as we wrap up here, would you just share a key takeaway that you want the viewers to keep in mind? It could be about metals.io. It could be about the bull cycle and how critically important it is for them to be considering investing in it and maintaining an allocation. But after that, let everybody know where they can learn all about your work, how they can connect with you, and how they could find metals.io.
Yeah, I think that the key thing that I would ask your audience to take away is to not be sort of scared away by words like crypto and blockchain and see this really as just an evolution of finance, right? We see in other asset classes, whether that's stocks or bonds, tokenization is the next frontier of that. And big shops like BlackRock are now talking about that and the importance of that. What we've done with metals.io is really just skip ahead a few steps and get to the end point by bringing markets that didn't have the financial infrastructure of other major asset classes, massive amounts of electronic trading, passive investment vehicles, that kind of stuff, and jump straight to tokenization. And so people should be, if they're comfortable trading the physical metals now or assets that are close to it and vehicles that are close to it, then just because we use the word tokenization and blockchain, that shouldn't scare you away. In fact, it should encourage you from all the benefits that we talked about before. In terms of finding out more, metals.io is your starting point. It's quite a simple URL. We're very pleased that we managed to secure that as a simple URL. You can explore the available assets. You can understand that custody and compliance architecture. Onboarding takes 30 seconds. And for institutions, producers, or larger allocators that want a deeper conversation, there's a direct contact pathway on the site, and my team and I can welcome those conversations and can support any further follow-ups that you may have. Uranium.io remains live. You can see the history there, and you can see sort of how it works end to end at a very detailed level of something that's been running for close to 18 months now. And finally, we are on social media, so X, LinkedIn, both metals.io and uranium.io, and look forward to future dialogue with all of your audience around how we can better improve our product and also what comes next.
That's wonderful. Well, I'll have all the information up on the screen. And for those tuning in, also, it'll be in the description area as a link. So you guys can click and get over to the social media or Ben's LinkedIn or to metals.io directly that way. Ben, thank you so much for coming on to Metals and Miners. It's been a lot of fun getting to know you, spending time with you, learning about metals.io. It's been fantastic. Looking forward to having you on again sometime soon. And everybody else tuning in, thanks for watching.
Thank you very much. Appreciate it, Gary.
I want to direct everyone who's interested in the metals and mining sector to dive into our Substack at mntx.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive.